and to give us more sense in terms of the GDP data now. Lata, over to you.
Well, to be fair, there were some things that supported and which everyone knew was not going to be impacted by the note ban. Agriculture. You know, it comes off a very low base. The year ago, Kharif was hurt by drought and therefore the quarter, the third quarter over third quarter growth is 8.7% in agriculture. Even year on year, the full year estimate number, of course, that is, the growth is about 4.4%. It's an unusually high number for agriculture. Likewise, government spending. Government spending was always expected to be high because the public administration item includes expenditure on health, education, payments to teachers, doctors, the whole swathe of public administration, and they were all beneficiaries of the 7th Pay Commission. So that was, 11.9% higher, 12% higher in the third quarter compared to the previous third quarter. For the full year itself, it is 11.2% higher. So these two have certainly boosted the GDP. But now for the shockers. The shockers come in the form of manufacturing in the third quarter, 8.3%. I mean, we got such low numbers from all the FMCG guys, from the two-wheeler guys. Where was this manufacturing? The logic perhaps was, as Dr. Pronob told us, was channel dumping. It had already been produced, not many takers, so perhaps it was dumped on suppliers. But nevertheless, that 8.3 is extremely startling. Even more startling is if you looked at GDP, not from the output side, but from the demand side, that is consumption, investment, from that side. The consumption in the third quarter has grown by 10.6% quarter on quarter. This is like the highest consumption in some 16, 18, or several quarters, probably the best since, oh yes, it is the best number since the new series began. So what we're actually saying is because of the note ban, consumption increased. That's where this number leaves you in a bit of a question mark. Is the base impacted? Because very surprisingly, the third quarter of FY16 has dropped very sharply. The quarterly breakup is really strange. For FY16, 7.8, 8.4, 6.9 and again 8.4. Like, why would the third quarter of last year drop so much? So, the restating of the previous numbers is creating some confusion, and still this confusion, the consumption conundrum is very difficult to take in. Perhaps there was channel dumping, perhaps there will be some slowdown in the fourth quarter, but really the final estimates of this will be known only 1.5 years, the revised estimates, and then the final estimates come in 18 months later. By then, I guess nobody would really bother about demonetization.
All right, Lata, thanks a lot for that, breaking every number up for us in every detail. In fact, Lata also caught up with Shaktikanta Das, the Economic Affairs Secretary, and Pronob Sen, the former Chief Statistician, to make sense of the third quarter GDP numbers. Let's listen into what they had to say.
Now we have the actual statistics before us, so far as Q3 is concerned, and on that basis the projection for the whole year. So let us go by actual statistics. Now, to make a speculation at this stage that some two-wheeler, two-wheeler manufacturing sector has not, did not do well during the Q3. But overall manufacturing has done well in Q3. 8.3% is a very robust growth so far as manufacturing is concerned. And also we cannot presume at this stage that the manufacturers were going on manufacturing and pushing the products into the supply chain. Now, nobody would like to block working capital and, divert capacities just for stuffing the supply channel. So all that I am saying is that the earlier projections, the earlier negative projections which were made with regard to the adverse impact, if any, of demonetization, I think they were all overestimation. And the economy has come back. It's very much back on the rails. And the process of demonetization is near complete.
I suspect that would be driven essentially by agriculture. Because you would have had the final estimate for the Kharif, which was very bad last year. So that's all right. I mean, I don't think that's particularly a worry.
Okay. No, that's a perfectly correct guess, because that did show us, that has shown, even when we look at the quarterly numbers, a slight drop. But nevertheless, it's a very convenient dip, you'll have to say. What have you got to say about the 7% GDP for the quarter gone by itself? Boosted only by public administration and agriculture, but even then, 7%, sir.
Well, I think, let's be very clear. What are the figures telling you? What it's saying is there's a massive difference between the GDP and the GVA estimate. Okay?
Yes.
Now, what that suggests is exactly what we've been talking about in the past as well, which is that there has been a lot of channel stuffing, a lot of prepayment of taxes.
Okay.
So that's showing up.
Okay.
If you look at the GVA, that hasn't grown very much.
Yeah, that's a
That's
fair
maybe
point.
6.6 or 6.7 or something
That's
like that.
right, 6.6%. So that point
Yeah,
is taken.
6.6. But even that, I think, needs to be taken with a pinch of salt because, manufacturing has been shown to have risen very sharply. And I suspect all of that is really channel stuffing.
In that case, Dr. Sen, at least private final consumption expenditure should not look so good. That is as high as 10% in Q3. Private final consumption expenditure.
Private consumption expenditure is always calculated as a residual. Okay, so you have your estimates on income, then you knock off what you measure reasonably accurately, which is investment and public expenditure. And what you have left is essentially consumption.
Okay. Well, in that case, I should also take issue with the gross fixed capital formation up by 3.5% for the third quarter.
No, that may well be true. Because this is fixed capital formation, so yes. I don't know. I mean, that is based essentially upon the consumption of essentially steel and cement.
Okay.
All right, time for a break now.